Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the top 5 high conviction plays to buy right now considering the current stock market environment. So you can buy these stocks or dollar cost average into these stocks regardless about what the stock market is doing. Whether it's in a correction, it's in a bear market, we're in a recession, it really doesn't matter. These plays are going to be fantastic to buy, especially if you can buy these at a discount. So for this video, we're mainly going to be talking about a long-term investing strategy for investors who want to buy these stocks and hold them for at least 5 years. And it really doesn't matter what the stock market is going to do in the short term or within 5 years, because at the end of these 5 years, it's a really good bet that the future stock price is going to be much higher than the stock's current price right now. So without further ado, remember to go and smash that like button right now for more videos like this one. Subscribe if you are new. Comment down below your high conviction stocks that you're buying right now. But now let's jump right into today's story. So we're going to start off with a healthcare stock, because the majority of healthcare stocks are what's called defensive stocks, and we want to buy defensive stocks while the stock market is falling. And this Motley Fool article highlights Cardinal Health. Now, I personally don't agree with them on their first pick of Cardinal Health. I think there are other companies that are much better to buy right now than Cardinal Health specifically that are in the healthcare space, which is why I currently have a hold for this company and not a buy rating. If you didn't know, Cardinal Health basically supplies hospitals with various types of consumables that we will talk about a little later in the video. The current stock price for Cardinal Health's CAH stock is $52.27. And if we look at what the bearish and negative investors say about the company, they think that the company is worth somewhere around $51. However, on the higher end, the bullish investors and the very positive investors who really like this company think that the company's worth around $74. And for me personally, I would rather wait for the current stock price to fall well below the $51 mark, but that's just me personally. More information about Cardinal Health is that the company provides various types of equipment for hospitals, such as rubber gloves, syringes, bandages, even some types of pharmaceuticals, including radiopharmaceuticals for medical imaging. They also give hospitals diagnostic kits. So overall, if you see it in a hospital, it probably came from Cardinal Health, because this company acts as a one-stop shop for various hospitals in the industry. And this is one of the main reasons why Cardinal Health has been able to grow very gradually over the last 8 years, because they have actually increased their top-of-the-line growth quarter over quarter for the last 8 years in a row, which is absolutely phenomenal. So if you want a very safe company to buy that's going to give you continuous growth for the next couple of years, clearly you could count on Cardinal Health. However, for me personally, it's just not my cup of tea. However, I really like their next pick, which is Salesforce, ticker symbol CRM. And I have a buy rating for this stock because right now it trades at only $165, and I think this company is at least worth $200. However, if we consult the more bullish investors, they think that the company could go as high as $385 within the next 12 months, and the more bearish negative critics of this company say that the company at maximum is worth $157 per share. This company has been offering its consumers web-based access to their customers' data all the way back since 1999, well before the cloud was commonly used. However, since then, Salesforce has clearly innovated and introduced new technology to where now their platform actually integrates with various third-party services, and according to the article, they provide holistic data to data analytics teams, and they support e-commerce operations. And just recently, as of June, Salesforce has unveiled a way for various clients to actually connect with TikTok users. So clearly, they are rapidly innovating and evolving their technology to grasp the current environment that we are in. Also, I want to add that the top of the line growth for this company is set to grow at around 20% this year, and the year after they are projected to grow around 18%. And if you didn't know, 10% is solid growth, 20% is great growth, 30% is very good growth, and anything above 30% is absolutely spectacular in my personal opinion. However, the overall customer relationship management software market which they are in is set to grow on average at a CAGR, or compounding annual growth rate, of around 13% per year from now until 2030, according to Precedence Research. So in regards to Salesforce CRM stock, I do think it is a good time to buy this company, even though it is not trading below the most bearish predictions. However, with that being said, clearly this company is anticipated to keep growing well into the future, and if you have at least a 5-year time horizon, then this company I think is going to make you money over the long term. Up next, we have another fantastic company named Palo Alto Networks, and I've talked about this company multiple times on the channel, so clearly I have a buy rating for the company. Right now, the current stock price for this company is $493.94, which does mean it's trading below the low-end bearish price target according to very bearish and negative naysayers and investors, which is $510. So it's really good to see that the current stock price is trading below the low-end maximum price target from critics, because it gives us a nice margin of safety. However, the more bullish investors, such as myself, think that the company could be worth up to $823 over the next year. However, I am not that bullish. My personal price target is around $650. However, nonetheless, this company is set to really increase their overall revenues because the market demand is set to explode. So what does this company do? Well, if you didn't know, this company is a cybersecurity company. And after we had a record-breaking number of successful hacks take place in 2021, according to the Identity Theft Resource Center, data breaches and hacks are clearly on the rise in 2022 as well. They're up by around 14% if we compare quarter 1 of 2022 to quarter 1 of 2021. So clearly the world is not doing a good enough job protecting their very vulnerable data. However, Palo Alto Networks can help these companies do just that. Now, Palo Alto Networks is just one of several publicly traded cybersecurity stocks and companies. However, according to Motley Fool, this is one of the best, if not the best, cybersecurity play right now. However, I'm not willing to make that particular statement about this company. There are other good cybersecurity stocks, and feel free to look into those as well. However, this is the company that Motley Fool is highlighting right now, and this is a company that I also personally own because of their cloud and edge computing, which in my opinion allows them to really innovate, respond, and assess various threats. Also, what's really cool is that their top-of-the-line growth is set to grow by 29% this year, and for next year, they're going to grow by around 22% according to current projections. And this is absolutely phenomenal because they're almost reaching that 30% threshold to be an absolutely amazing company that's going to grow by almost 30%, and even next year, they are going to grow their top-of-the-line, according to current forecasts, by 22%. So this is absolutely phenomenal, and I am pretty bullish on this company. Another company that I like is Lam Research, ticker symbol LRCX. And remember that ticker symbol, LRCX, because there is another company called Lam Research, but it does not have that exact ticker symbol. And of course, this is going to be a buy rating from me as well, because the current stock price is trading below the low-end maximum price target from very bearish analysts, which currently comes in at $510. However, if we look at what investors think the company is worth, they think that the company is worth somewhere around $840 on the high end over the next 4 months. And the reason why the current stock price is rather low, coming in at only $426, is because the LRCX stock has dropped around 40% since the end of last year. So clearly it's been hit really hard because technology stocks and semiconductor businesses have been hit very aggressively by the market sell-off. So what exactly does Lam Research do? Well, the company basically helps other semiconductor companies. They are a supplier of wafer fabrication equipment and services to the semiconductor industry. The company does things like designs, manufactures, markets, refurbishes, and they also service semiconductor processing equipment. So for very familiar chip companies such as Intel and Taiwan Semiconductors, clearly if they are doing well, then Lam Research is also going to do very well due to the company's atomic layering, their plasma cleaning, the ion etching tools, which is just some of the hardware that chip foundries have to use and buy in order to manufacture their computer chips. So clearly, this is going to be a phenomenal company to buy and hold for the long term, and I personally also own this play. Lastly, it's going to be of no surprise to anyone, it's one of my personal favorite all-time companies, which is Amazon, ticker symbol AMZN. The current AMZN stock price is $106.21. However, the low-end investor price target for this company is $107, and the high-end investor price prediction for the next year goes all the way to $232 per share, and clearly this is one of my high conviction plays, and it's in the majority of my stock picking videos. Amazon is best known for being an e-commerce company because the rule for Amazon is that literally they are one of the most dominant companies in the United States because their e-commerce business now accounts for literally more than half of the United States' total online retailing revenue by itself, which is absolutely insane. However, I really like what Amazon is doing because now I'm starting to think of Amazon more as a cloud computing and advertising company. So why is that? Well, mainly because of their Amazon Web Services or their AWS platform, which has accounted for 3/4 of the company's operating income, and it only accounts for less than 1/6 of its revenues. And as far as the company's advertising goes, Amazon has actually disclosed that its ad revenue is generating around $31.2 billion worth of business for the overall company as of last year. So that's absolutely insane. So clearly this company has a very bright future ahead of it, along with the majority of the companies on this list. However, I would love to hear your thoughts down below. Don't forget to comment your high conviction plays down below in the comments, because I could also review them in a future video. Remember to go and smash that like button, subscribe if you are new, and I will see you in the next YT video.